There is one sentence that can turn a simple roofing job into a very uncomfortable conversation. My insurance is paying for a new roof. Then the estimate arrives. The roof costs $20,000 to replace, but the carrier's payment is only $10,000. Now the homeowner is shocked. Your salesperson is confused, and you are trying to explain where the rest of the money went. A federal housing policy change announced on March 18, 2026, could make conversations like this more common. Fannie Mae and Freddie Mac no longer require roofs to be insured on a replacement cost basis for mortgages that must meet their property insurance standards. Roofs still have to be insured, but actual cash value coverage can now satisfy the mortgage-related requirement. That does not mean every homeowner is being switched to ACV. It means a depreciated roof payment can now meet requirements that previously called for replacement cost coverage. For roofers, verify coverage before promising what insurance will pay. Fannie Mae and Freddie Mac do not write insurance policies or approve individual roof claims. They establish standards for mortgages they purchase or guarantee. On March 18, 2026, those standards were updated. The property must generally remain insured on a replacement cost basis, but the roof is now an exception. It still has to be insured, but it does not have to receive replacement cost settlement. That means actual cash value roof coverage can be acceptable for qualifying homes and condominium projects. But this is permission, not a command. It does not force insurers to place every roof on ACV, rewrite existing policies, or mean every borrower now has worse coverage. Actual coverage still depends on the policy, declarations page, endorsements, roof age, and insurer. Replacement cost value and actual cash value are not the same thing. Replacement cost value is based on replacing damaged property with new material of comparable type and quality, subject to the deductible, limits, exclusions, and policy conditions. Even with an RCV policy, the carrier may initially pay only the actual cash value and hold back depreciation. That depreciation may become recoverable after the work is completed and the required documents are submitted. Actual cash value generally starts with replacement cost and subtracts depreciation. Suppose replacing a roof costs $20,000. The homeowner has a $2,000 deductible and the carrier applies $8,000 in depreciation. Under a non-recoverable ACV settlement, the payment could be $10,000, leaving a $10,000 gap. Under an RCV policy, the depreciation might be recoverable after the work is completed. Under an ACV-only roof endorsement, it may not be recoverable. This is not only an insurance problem, it is a sales and customer expectation problem. Imagine your salesperson tells a homeowner, "Don't worry, insurance is buying your roof." Then everyone discovers that thousands of dollars in depreciation are non-recoverable. Now the homeowner may have to pay the difference, seek financing, delay the work, or cancel the project. Even when the coverage issue had nothing to do with your company, the homeowner may remember that your salesperson promised insurance would handle it. That is why roofing companies need to verify coverage early and explain the numbers before the contract is signed. This change does not eliminate roof insurance, force insurers to offer ACV, force homeowners to choose it, or automatically change existing policies. It does not mean every roof claim will now be paid at actual cash value. It also does not remove deductibles, exclusions, coverage limits, or other policy conditions. So avoid telling customers that the government changed everyone to ACV. A better explanation is, Fannie Mae and Freddie Mac now permit roof coverage that may settle losses on an actual cash value basis. We need to review your specific policy to determine how your roof is covered. A professional supplement may help document legitimate items that were omitted, underestimated, measured incorrectly, or left out of the carrier's original estimate. That may include incorrect quantities, damaged components, necessary labor, material pricing, disposal, access requirements, specialty bids, or applicable building code items. The supplement should be supported by photographs, measurements, invoices, reports, scope notes, and code references. But a supplement cannot rewrite the insurance contract. It cannot transform ACV into RCV, make valid non-recoverable depreciation recoverable, erase the deductible, create coverage for excluded damage, or guarantee approval. Its role is to document legitimate covered work that may be missing or incorrect, not to invent coverage the homeowner never purchased. If you run a roofing company, subscribe for insurance, Xactimate, supplement, and sales updates. Now let's cover 4 steps your company should take. Before telling a homeowner what insurance will pay, ask whether the roof is covered under replacement cost value or actual cash value. Request the declarations page and roof-related endorsements when appropriate and authorized. Look for wording involving ACV, RCV, roof surface payment schedules, limited roof coverage, non-recoverable depreciation, special deductibles, cosmetic damage exclusions, and age-based settlement provisions. Your sales team does not need to interpret insurance contracts, but they should know when clarification is needed from the homeowner's licensed insurance agent or carrier. The goal is to avoid building the sale on an assumption. Train your salespeople to stop saying, "Insurance is paying for the whole roof." That sentence creates a promise your company may not be able to keep. Use language such as, "We'll review the carrier's scope and compare it with the damage and necessary work." Or, "The final payment depends on your policy, deductible, approved scope, and whether depreciation is recoverable." Good salespeople create confidence by explaining what happens next, not by overpromising. Make the numbers visible before production begins. Show the replacement price, approved replacement cost value, calculated actual cash value, deductible, recoverable and non-recoverable depreciation, approved supplements, and homeowner responsibility. Do not assume the homeowner understands the carrier's estimate. Walking through the figures early can prevent disputes and gives the homeowner time to consider financing before materials are ordered. ACV coverage makes accurate scope documentation more important, not less. Use accurate measurements. Take clear photographs. Document each damaged component. Collect specialty bids when needed. Identify applicable code requirements. Review the carrier's scope line by line. Explain why each requested item is necessary. Separate legitimate scope corrections from items that are not covered. If the policy already creates a depreciation shortfall, your company cannot afford to lose additional legitimate money because the estimate omitted necessary work. Here is a simple explanation you can use at the kitchen table. Your policy determines how the insurance company settles the roof. Replacement cost coverage may allow withheld depreciation to be recovered after the work is completed. Actual cash value coverage subtracts depreciation based on the roof's age and condition, and that depreciation may not be recoverable. We'll compare the insurance scope with the actual work, document legitimate missing items, and show you the expected numbers before the project begins. That explanation educates the homeowner, protects your company, and explains the value of a detailed estimate without overpromising. Reviewing carrier scopes, writing Xactimate estimates, documenting missing items, and preparing supplements takes time. That is time you could be using to talk with homeowners, support your sales team, manage production, and close more jobs. American Roof Supplements handles the computer work for roofing contractors. We prepare professional residential Xactimate estimates and supplements, provide free revisions, and brand the documents with your company's logo. There is no contract and no minimum number of jobs. Your first estimate or supplement is free, and eligible residential work is backed by a 72 business-hour turnaround guarantee, excluding Sundays and major holidays, or the service is free. Call American Roof Supplements at 469-515-8435 or visit AmericanRoofSupplements.com. The March 18th rule did not cancel roof coverage or automatically switch every homeowner to ACV. It removed a mortgage-related requirement that roofs receive replacement cost coverage, allowing actual cash value roof coverage to meet Fannie Mae and Freddie Mac standards. For roofers, the lesson is straightforward. Verify the coverage early. Use accurate sales language. Show the homeowner the real project math. Document every legitimate part of the claim. A supplement can correct an incomplete scope. It cannot replace coverage the homeowner never had. Roofing companies that understand that difference will have better conversations, fewer surprises, and stronger customer relationships. Subscribe for more roofing, insurance, Xactimate, and supplementing updates. And remember, focus on your customers, crews, and sales. Leave the computer work to us.